Good day. This is the Elliott Wave weekly update for the S&P 500, being recorded on Sunday, October the 27th, 2024. I'm going to start with the SPX, and I'm going to pull it back up. I'm going to start on the 3-year weekly chart, and so therefore I can just review very quickly where we are on that big picture. And the largest degree that I'm counting right now or showing on these charts is the primary degree. And so I feel the primary wave 4 completed in October of 2022, which then suggests that we have been involved or tracing out a primary fifth wave from that low. And within that, it'll consist of 5 waves of intermediate degree, of which we have 1 and 2 complete. And I believe we're getting close to the completion point for intermediate wave 3. What comes next would be an intermediate fourth wave correction, and that correction would be expected to bring us back down to the low of, or the area of, the minor fourth wave. As Elliott told us and wrote, that the fourth wave in progress will find its terminus, its endpoint, within the price territory of the previous fourth wave. In this case, intermediate previous fourth, or of one lesser degree, excuse me, not the previous, of one lesser degree. And so one lesser degree from intermediate is minor, and that suggests that we come back down to here once again. But I am anticipating that minor 5 is likely going to, of course, make a new high above this and get somewhere above 6,000. That's kind of my thought on this. Now, bringing this down to the daily chart, we can start to look inside to see that we still are doing 1, 2, this is a 3. And in case you're wondering, here we have a 1, 2, and then again, we start to go back up. 1, 2, 3, 4, 5 of 3 here, 4, 5 of the minute. So I can count the minuet degree all the way up. So we have a 5-wave structure up. That's wave 3. And we're still involved within the minute wave 4. I had initially thought that maybe we had finished that and we were starting to move higher. And what we have in place, actually, I'm just going to go down to the hourly chart because we just want to get inside this thing right here. There's the 3. Let me bring that down so that we can open this up just even a little bit more. And then we had the A. Now, this could have been an ABC, and I would have put the 4 there. And then this could be 1, 2, and we were launching in the 3rd. And it certainly kind of had that feeling on Friday morning as we gapped higher. And then we just reached that high, and then we dropped. And once we broke that level, that left this as 3. So I had to back out and say, okay, A, B, and we're going to drop in a C wave. Now, most common on a fib basis would be that C would be equal to A, and that comes in at 57.47. So I'm going to leave that window at 57.50 down to 57.40. Now, if we get a little bit stronger of a decline early next week, then we have the capacity we can come down to 56.75. So, and we're not breaking, if I take this back out to that 4, we're not breaking any of the rules because there's minute wave 1 all the way down there. So we would not be overlapping any. So we're still good and we can come down, and they might just start the week that way. Also, next week, we have a slew, in fact, the majority, I would say, of third quarter earnings are going to be reported next week. So it's just going to be a constant flow all week long. Intertwined within all of that, of course, are going to be Apple, AMAT, Amazon, Google, Meta, Microsoft. So AMAT's not a part of the Mag 7, but Apple, Amazon, Google, Meta, and Microsoft are. So 5 out of the 7 are reporting. And Broadcom will come later. NVIDIA comes later, November. So we have these larger, the Mag 7 reporting. We also have Eli Lilly, we have Merck, we have, the list is just very, very extensive. So we have pharmaceuticals, we have Starbucks, I believe, we have a couple of the banks, Not the major banks, but a lot of the other next level down banks are reporting next week. Um, we have some retail. I think we have some airlines. We've got a little bit of everything coming in next week. And so I think it will provide a lot additional definition on our bigger picture as well as our little bit short-term picture. Now, being that the largest weighted stocks, those being Apple, Google, Meta, Microsoft, are reporting from Wednesday, and basically, and one of them starts on Tuesday. We have Tuesday, Wednesday, Thursday. And on the heels of all that, the market really is going to be looking to see how these Mag 7 that have been dependent on revenue from advertising, revenue from AI. So is the AI now past that hype stage, and now we're going to see how it's being monetized? And are these companies actually making money? Like Google, they're going to be looking at their AI search engine. They're going to be looking at, in Microsoft, they're going to be looking at their AI products. So again, Amazon, they're going to be looking at web services. So, and then on the retail basis, how is Amazon doing? I think just from my own, that I use Amazon consistently because they bring it to my door, I can't imagine that they're actually not doing well. So I'm thinking that we might get some good earnings reports out of this. It's going to depend. I think that the one that would be majorly watched is going to be Apple. And it's going to be, is Apple going to be able to continue their string? Is it going to continue that the revenue is going to be generated from iPad, iMac, and iPhone sales? And questionable. We don't know. We're going to find out. And if not, is it just going to be a little bit, not as big of a ding? We'll find out. But these are the things that the market, I believe, is going to really be paying attention to and reacting to. And so we will begin to see this on Tuesday. And then we will just go the balance of the week. So for right now, though, I think we can begin on Monday by fulfilling the C wave, putting in the wave 4, and then maybe in earnest starting this 5th wave up. And we might have to wait till we get some of these earnings reports on Tuesday, Wednesday, and Thursday to really get that going. But my expectation remains for the market to continue higher to finish the minor 5th wave. Now, the difference here in the S&P versus the NASDAQ, the S&P has already been pretty close to 5,900. So again, could we begin to say that this high maybe completes the whole package? We're certainly gotten above minor wave 3. Is there a way that this count could be shifted? And I would have to say, yes, there is. And then what does this suggest? This is not really what I would think would be the beginning of an intermediate 4th wave. That's been my hesitation. But I can't deny that, well, that's been a pretty strong rally, and I am looking for that minor 5th wave high, and I have, for intermediate 3, I've got 3.618 up here at 59.67. Well, what if it came in just below? So these are all possibilities. What keeps that higher level alive is the fact that this was 3 and that was 3. So that would mean that I think we come down in 5 and then we start to build on that 5th wave. If it's going to be the 5th wave, it's got to go. It's got to, we can't go 3 and then drop. Unless, excuse me, unless that 5th wave, the minute 5th wave is also going to form a diagonal. Then of course it'd be 1 is 3, 2 is 3, 3 all the way up. But then maybe we're not going to be looking for maybe just above 6,000 if they can get it. But I'm feeling that with the earnings reports that we're getting, particularly in the Mag 7, we stand a good chance that they will just push and it'll make it up there. Now, I'm going to wait for the 4 to get a cleaner read. Now, for minor 5, they're still all the way up here. In fact, I could put 1.618, but we've exceeded it. So if I go here, even say, okay, let's go take a look at 1.618, 1.882, which are two very strong fib levels. They've already exceeded both. Well, we have not exceeded 59.30, which is 1.882. But I'm expecting more in that case. So that's why I took them off for right now so that we can see the true possibilities. To tell you this, yeah, I'm going to leave it off for right now because if it's currently what I think, I think we should still under either that it's a C wave and we put the 4 down here, or if the 4 goes here and we're working the diagonal, I think we get up above this level and probably closer to 6,000. I do think that is in the scope of reality, so to speak, for the S&P. Now, once I get that 4, then I'll be able to connect one more, which will fill in some blanks in between. We get the minute 4, and then I can put some initial estimates for minute wave 5 as it is compared to minute wave 1. And I'm sure we'll be using 1.618, 2.618 because the minute wave 1 is pretty small as it's tagged here. Just going back out to the daily to look at the moving averages on the SPX, we have the 20 going flat just under fib support at 57.91. So that is likely coming in at 57.87, 88. Now, I suspect just a resting point. I think they might even hit that tomorrow morning, go through it. Once they do, it should pick up a little steam. 100% fits, where wave C equals 100% of wave A at 57.50 down to 45.40. We'll give it a 10-point window because that low is 60, the low 62. So 57.50, which continues to be an important number for the levels. In other words, gamma levels, the volatility trigger levels, all those different levels that get and put in place. I think 57.50 remains important. Now, what do we have underneath all that? We have the 50 period moving average, the daily 50, coming in at 56.79, and then the 1.618 fib at 56.75. So we have two high candidates between 57.50 down to 40, and then 57.80 down to 56.75, 70 down in that area. And then I would look to put the C and the 4, and then we launch. And again, that launch should be sustainable. So in other words, we start to make the 5 waves up, and if we're in the small minuet, wave 1, it should still form 5 waves up. And we should get a little bit of a pullback, and then we go again in a third. So once it's going, if it is going to occur, we should not have a problem getting up towards this level. Well above 5,900. We've already been to 58.78. Getting to 5,900 is 20 points from that high. I think it should be very doable for the market based on earnings or other things. Now, the other thing that I need to add, of course, not that we are forgetting, we have the election on November the 5th. We have the Fed on November the 7th. So we have 2 things, plus earnings. And so there's just a lot left to digest, for the markets to digest. And also, I know we're doing year-end posturing as well. And once we click into November, seasonally, they still say pretty much a strong rally. Now, I have to temper that with that I'm also getting a lot of analysts that are continuing to say the markets are extremely overvalued. I mean, I've gotten some reports that are suggesting that the market is over 50% overvalued by over 50%. Now, you start getting up into those levels, and you're like, well, what's that going to look like if it really starts to come undone? Overvaluation is going to be corrected in my mind by intermediate wave 4, which is just going to actually bring us back to 5,100. Now, just speaking of that larger picture, 5,000 remains rock solid support. There is huge gamma positions sitting at 5,000, and they must be rolling them out, obviously, because it has remained there for a while. We're talking about it remained. It was in August, which in September, and then in October, and now we're moving it out into November. And the answer would be yes. In fact, some of it gets raised up, but I think there's just big positions that are sitting at 5,000. And then, of course, what we have above all of this is we have the JP Morgan call side of their collar. And I believe that's at 60.40. Now, I have had some resistance levels, fib levels, at about 16.45, 60.40, 60.35, somewhere, all in there. So my belief is that if possible, I believe the market wants to go up and test that level. Now, whether they want to do it during November or whether they're going to try to do it into December, I believe at some point they're going to want to go up there and test that level. So we got a lot going on to finish this quarter. First earnings, then the Fed, then we'll be looking at year-end posturing. Let's go over and take a look at the futures market. It's basically doing exactly the same thing. Starting here on the daily, also just kind of taking a quick peek. The same deal, except here the fibs are a little bit different in that the market has come down and it closed just above the 20, which is at 58.33. And the close on Friday was 58.41, and it had come down to a low of 58.35. So it saved itself from breaking the 20. I know it had come late in the day anyway. And so it pushed itself back up a little bit. I think a break there pushes us through 58.22 and on down via the futures market down to that where C will equal A at 57.75. And you can put that window 57.75, anything below 58.01 basically. So I'm going to say 57.80 down to 57.70 would be the window here for that support to complete, if it is a C wave, to complete that C wave and to then put the minute wave 4. A continued drop would suggest that we can come all the way down. Now we have the 50-period moving average on the daily at 57.40. Not bad, still staying above 5,700. If we drop below, it's right below. 56.96 is 1.618. I would not be looking for 2.618 at this time. And let me just make one quick adjustment to all of this and put it in the right context. Yeah, these are minuet. Minuet. And I'm going to take that one off because I'm not expecting that low. If it does, we're overvaluating. So here we have for minute wave 4. Excuse me. Let me just make another quick adjustment. See, I always see it when I open up my charts. There. So here we have for minute 4. These are the support levels. So you can see how they start to match up. 57.65, 100%, 57.75. So what did I say? 57.80 down to 57.70, but you can go all the way down to 57.65. And then we have 382, and that's just below the 50, and the 1.618 fib, that 38% is at 56.65. So it's about 100 points. And the 50%, I'm not really looking, but I do include it if it just has a really good slide. And what I also didn't mention is like we still have geopolitical situations Ukraine conflict, the conflict or the war between Israel, Iran, Hezbollah, Hamas, whoever else wants to join that one. So we have these still in play. Right now they're contained, but they're still in play. And if something shifts severely to that, I do believe that it could put a dent in the markets. All right, so let me go down now to the hourly chart and let's look inside. So that was the 3, and then I thought, okay, that could have been the 4. 1, 2, and then we were launching like great, 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 and then we stopped and we came down and broke. So as in the cash, you see it's an ABC. So I've gone back and saying, okay, this is an ABC down. So that's A. B, now you would think we'd get a flat, and it's not. It's not. But, this is A, B, and then, we get this strange pattern in here. But I think it is an ABC. And then we had another ABC, so an A and a B, and we're looking for 5 down. So I think we actually start that way later this afternoon, evening, when Globex opens. We're going to see. And we'll watch this rocky road develop, because as I said earlier, there has been a lot of talk about overvaluation. And whether this all holds itself up and starts after the election or it starts next year, to be determined, but it's not going to reduce the overvalued side of our market right now. And I don't think that, I do think that the options flow, the capital flow from product to product, from sector to sector, even within the options, where they're moving the money and that produces the gamma flows, I think that will continue to be a major, major factor in the moves within our indexes. So, yes, I'm thinking that, well, we can come down there and then we should start wave 5. And I am going to leave it right there, to be honest with you, because there's not too much more to be added. We're going to have to wait to see how all of this comes out this week with all of the information that will be added. And the next Elliott Wave daily update will be on Monday, October the 28th.